another consolidation? Is what we're currently seeing on the chart just another several month sideways movement? Or is it just the calm before another breakout to the upside? Let's get started. Hey, welcome to another episode of the Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and an altcoin chosen by you. We meet up, and as you already know, we take a look at the charts from 4 different perspectives: technical, on-chain, fire charts, and from the AI perspective, where we consider the altcoins available on Kanga, their growth or decline potential. You appreciate that the kind of analysis we serve up here can't be found anywhere else on the web. The number of our subscribers is really skyrocketing. Thank you very much for that. But before we move on to the analysis, please remember that the content in this material absolutely does not constitute investment advice. For advice, consult a licensed advisor or simply do your own research. So if you're ready, maybe you're new here, be sure to hit that subscribe button, grab a coffee, and let's get into it. So, Bitcoin is consolidating, and it's doing so right in the zone we've been eyeing as resistance for some time now. The resistance comes, among other things, from Fibonacci retracements based on the trend, which indicated that a breakout could lead us right into this gray box we're observing here. Additionally, the price target was also derived from the height of the channel. As we know, the price of Bitcoin shot up a bit higher, above $123,000. We saw such a breakout on Monday, July 14th, but afterwards there was a pullback. This pullback was also confirmed here by the 9th bullish candle of the TD sequential indicator, which tells us that a correction or consolidation may occur at this point. Let me point out that consolidation is also a form of correction. And we can see that at this moment, Bitcoin is clearly resisting our gray box. It's also worth noting that a divergence has appeared on the RSI indicator as well. Unfortunately, it's a bearish divergence, but hold on, it's not that significant though. Still, it's worth highlighting. It appears here between these two peaks where we see an upward movement. Meanwhile, between these two peaks on the indicator, we see a downward movement. So what we see, and what's most important here, is the fact that this divergence is located in the so-called overbought zone, which makes it relatively strong. However, here we have a relative flattening between these two price bars, so I wouldn't consider this as a divergence that could push the price particularly deep. In my opinion, the level of $112,000 is still the area to which Bitcoin can calmly drop, reset most of the indicators, and then try again to move upwards, basically aiming to break through this gray box. It's also worth noting that the RSI is moving well above the 50 level, so if Bitcoin were to experience a drop here to $112,000, again, emphasizing $112,000 to make it more visible, this is exactly the area. Well, in that case, the RSI would probably drop down towards the 50 level, which is again the boundary between bulls and bears. This value is very often defended during upward trends. And in this case, the justification for further growth would be very, very strong. And now, as usual, let's look at Bitcoin on the weekly chart. It's worth noting here that last week was when Bitcoin reached a new all-time high. Nevertheless, it also experienced a decline because the candle from open to close actually dropped by 1.5%. Additionally, it's worth remembering that the RSI is at 67, so it's still relatively high and not yet in the overbought zone, which is actually quite a positive signal, giving potential for a significant upward move here. Besides that, as we can see, the MACD continues our upward trajectory and maintains bullish momentum. MACD is a lagging indicator, but nevertheless, it sends quite a positive signal here, indicating that further growth for Bitcoin is still fully justified. Fire charts for Bitcoin also show greater upward potential than downward, as they clearly display very thick buy clusters here. Let me remind you that the blue line represents the price of Bitcoin, while everything below it, the brighter it is, the larger the volumes, in this case by orders, are distributed here. It's the same with the sell volumes, which are located above our blue line. And let's note that these clusters are distributed in the brightest areas, at least from the value of $117,000 down to just below $115,000. And these are really quite large buy orders. Besides that, we can also see a single band here at $113,500, where there are also quite a lot of buy orders. It's worth noting, however, that right now below, or actually above, the current price, we have this dark area where there are relatively few sell orders. So maintaining this consolidation and pushing the price up here to around $120,000 is justified. However, Resistance starts to appear around 121, 122. We can also see very clearly at 123. So the balance of power on the chart is changing because previously we pointed out that the resistance levels were spaced roughly every $5,000. Now we see them every 1,000. It's also worth paying attention to who has been buying recently. And we can see that once again, the brown wallets are leading the way. That is, the wallets of the biggest whales, and the purple wallets, which are the second largest. Despite this, today they are on a slight downward trajectory. Basically, since midnight UTC, they haven't been buying anymore. They're slowly pulling out of the market. As we can see, the other wallets are following their lead. It's also worth looking at how the retail investors are behaving. And in this case, the orange line represents the retail investors. And they've been on a downward trajectory for several days now, 5, if I count quickly just by looking at this. So during this consolidation, retail investors aren't buying. Meanwhile, as we can see, the big players are active. Ethereum surprises by soaring to an impressive value of $3,850, which is basically just below our technical resistance marked by a certain line we've been watching for quite some time. It's possible that right now, a certain kind of zone is forming here. A zone that will serve as resistance from 4,000 down to 3,800. But to be sure about this, we definitely need to wait a bit longer. It's worth noting that Ethereum has broken through $3,500, and here we mentioned that it would most likely not encounter resistance, especially since at that time we were dealing with the 9th bullish candle on the TD sequential, and yet a pullback did not occur. It's rare for the TD sequential to be this wrong. But as we can see, the indicator hasn't reset either. For it to be reset, today's candle, which at this moment is still red, would have to. We'll see how it looks at the end of the day. It would have to close below the 4th previous candle, which is the Saturday candle, so below that value. Right now, I'll say $3,590. So as long as this candle doesn't close, the TD sequential indicator isn't reset. What could this tell us? That declines or consolidation are still in play. Well, if declines could happen here, then to what value? Well, the first obvious support is $3,500. Easily broken before, now it can serve as a key support for the price. A support that, in this spot, was actually resistance before. And not just here, historically, we've seen many times that 3,500 acts like a magnet for Ethereum. But if this area gets broken and Ethereum dives deeper, then it's worth once again taking a look at our gray box, and at the red line heading towards it, or actually already inside it, which is the 50-day moving average. Now, when it comes to those lucky shot type orders, I would definitely place them around these gray boxes and red lines. On the other hand, for more logical orders, here it actually makes a lot of sense to set buy orders around $3,500. But remember, this is not investment advice, it's just what I'm currently doing. However, it's also worth paying attention to what's happening on the RSI. And on the RSI, we have a very strong breakout to very high values, here exceeding the threshold of 87 points, so the so-called overbought zone has been significantly intensified basically by Ethereum. And such breakouts require a reset. They need this indicator to cool down a bit. So if this day, as we can see now, is red and ends in the red, it will be beneficial for the price. This change of hands is very much needed. It's also worth taking a look at why Ethereum is breaking above resistance levels so easily. I talked about this on my Twitter when I shared information about what's happening exactly with the ETFs, and here, what do we see? What we're seeing here is the yearly chart of Ethereum ETFs, and we can see that such high buying bars, such high buying volumes as we've observed here in the last few days, have basically never been seen before in Ethereum's history. So, in my opinion, the upward movement for Ethereum can definitely continue. Consolidation, a reset of indicators, absolutely, but this is still not the end of the bull run for Ether. And now, the fire charts for Ethereum. Here, although we can't glean too much from the fire charts, we do see significant support at the $3,600 level, and just above that as well. This is where the buy volumes are concentrated. But when it comes to the CBD, there's actually quite a lot happening, and it's getting really interesting. Let's pay attention to this divergence that's forming here. First, let me mention the wallets we see at the top. The orange line represents retail investors, meaning those wallets holding between $100 and $1,000 in balance, either waiting to buy Ethereum or even buying it right now. The brown line represents whale wallets, meaning those with a balance between $1 million and $10 million. And in this case, we also see a green line here, which represents wallets holding between $1,000 and $10,000. And note that these wallets are on a very clear upward trajectory, and they are currently buying Ethereum. On the other hand, wallets holding between $10,000 and $1 million are behaving in a completely opposite way. These wallets, for the past, not for 2 days, but actually for several hours, for about a dozen hours now, have completely withdrawn from the market and are currently not trading Ether at all. Well, that's an interesting discrepancy. We'll see which forces turn out to be stronger, which ones will drive the movement in Ether and basically determine whether it goes up or down. The altcoin we're putting under the microscope today is Cardano. Cardano, also known as ADA. Cardano, which is breaking out very strongly and is basically following Ether's path at the moment because it had a very clear resistance at just under 83 cents and has broken out significantly above that level. In this case, as I look, it's just under 94 cents. Currently, Cardano is in consolidation, at least for now we can say that, or possibly in a correction, because we see declines here that are aiming to reach the level of 83 cents, quite similarly to Ether, which is currently aiming to reach a value of 3,500. From above, of course, so the natural support point is this white line we see here, just under 83 cents. It's worth noting that ADA also broke through all the moving averages here very nicely and ignored the TD sequential indicator as well. In other words, it did exactly the same thing as Ethereum. If these declines deepen, then in my opinion, the natural point of the next support will be around 75 cents, because that's where the 200-day moving average is located, in this case, this green line here. The yellow line, which is the 100-day moving average, is also heading toward this green line, as well as the 50-day moving average, which is shown as the red line. And they might actually converge right around this area. If ADA drops to these values and all our moving averages are located here, in my opinion, this will be a very bullish point to buy. But remember, this is not investment advice. Besides, it's worth paying attention to the RSI. The RSI highlights the overbought zone, which could mean that, just like with Ether, ADA is once again experiencing a period of consolidation that it needs to go through in order to reset its indicators and soar upwards. So the support levels are clearly marked out. We can see very clear support right here around 83 cents, and also very clear support near the 200-day moving average, which is further emphasized by these small peaks here. And now let's take a quick look at ADA on fire charts. And here we can see a clear resistance at the $1 level. Apart from that, we can also see some support starting to form around 83 cents in this case. So that's the value we were talking about, and a bit lower, around 75 cents, which is near our, let's take another look, 200-day moving average. So these are definitely justified levels. We can see that traders are watching what's happening on the technical chart and placing their orders accordingly, whether buy or sell orders, and those buy orders around the 200-day moving average have been placed over the last 2 days, so they're quite fresh. Besides that, let's also pay attention to the CVD and see what's happening here. And we can see that retail buyers are buying, and the purple wallets are buying too, meaning both the smallest and the largest players. Apart from them, the rest are basically on a downward trajectory. And if you'd like me to analyze your altcoin, remember, it's a very simple thing to do. All you need to do is register on CANS, and you'll find the registration link in the description of this video. Take a look at the cryptocurrencies we have, and let me know in the comments which crypto you'd like to see in the next video. The one that gets the most votes will be presented by me not next week, actually, but in 2 weeks. Why in 2 weeks? Because next week there will be a special episode where I'll talk about what stage of the bull market Bitcoin is currently in. So I warmly invite you to come back here in another 7 days. And there's also the AI analysis where we check out those altcoins available on the exchange that, according to AI, have the greatest potential, in this case, for growth. In front of us, we have cryptocurrencies like Tezos, Uniswap, and Mask Network. Each of them has broken through an important resistance level on its chart. I want to emphasize that this is a horizontal resistance level, which from a technical standpoint is the most significant. And in this way, Tezos has a growth potential of over 53% in 69 days, Uniswap 38%, and just under 0.5% in 87 days. Meanwhile, Mask Network offers a growth potential of 35.6% in just 16 days, so that's relatively much shorter than the other cryptocurrencies. That looks pretty good. Well, besides that, there are 3 other cryptos on my screen that also look quite impressive. If you want, go ahead and take a look. The American Bitcoin spot ETF market is selling off, but watch out. It's selling off on low volumes. Let's take a look at the chart, and here we have 2 tiny volume bars that correspond to the last 2 days. And we can see that the profits that were being realized from the gains we've been observing for over a month, actually even much longer, are now turning into these tiny selling bars, which are simply profit taking. Are these profits significant? Most likely, yes. If Bitcoin was being bought at values around $100,000, we really shouldn't be surprised by this at all. But it's also worth noting that two red bars like this don't change anything on the chart whatsoever. They only highlight the ongoing consolidation and the handover that needs to happen so that Bitcoin can soar higher again later on. It's time for on-chain analysis. Today, I've prepared 3 indicators. First is the amount of stablecoins in circulation, which we haven't checked in a while. It's worth reminding at the very beginning that the orange line is the indicator line. The gray line is the Bitcoin price line. And we can see very clearly in this case that the orange line is rising sharply upwards, which means that the amount of stablecoins keeps increasing. And if there are more and more stablecoins, well, they're there to buy Bitcoin. And that could mean that price increases are still ahead of us. The number of active addresses on the Bitcoin network, even though Bitcoin is reaching new all-time highs, on this indicator we're still only about halfway to the ADH. As we can see, the active addresses indicator spiked sharply in 2017 during the ADH, as well as in 2021 under very similar conditions, although here it happened at the first peak, which was the April peak. Currently, even though the value of Bitcoin is almost twice as high as what we saw in 2021, we are still far from reaching similar levels here. So why is that? Well, mainly because there are no retail investors on the market, and if there are any, they're in ETFs. And as we know, ETFs don't use such a large number of addresses for this chart to reflect that. And the last chart is the Bitcoin balance on exchanges. It's worth mentioning this one a bit more often, and we can see that in recent days, there has been a clear uptick. These price increases in Bitcoin are causing more Bitcoin to flow onto exchanges so that it can later be sold. We saw 2 red volume bars on the ETFs, so most likely this price uptick corresponds to those volume bars observed there. However, it's worth zooming out a bit and noticing that despite everything, Bitcoin on this indicator is still on a downward trajectory, which means that in the longer term, Bitcoin is continuously leaving the exchanges, so a liquidity crisis could emerge. A liquidity crisis that, in turn, could push its price much, much higher. It's time for a contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video, so it can be Bitcoin, Ethereum, or Cardano. Present a technical, on-chain, fire chart, sentiment, or fundamental perspective. Whatever you like, and remember, you don't have to agree with me. The author of the most interesting comment posted under this video by Friday at midnight will receive 20 KNG from me. And the winner for the previous episode is Kaya, who analyzed ETH. Congratulations, Kaya. Please contact support to claim your prize. That's all for today. If anything in this material seemed complicated to you and you'd like to dive deeper into technical analysis, but you're still a beginner, be sure to check out Kanga University. The link to Kanga University and to the lesson on technical analysis can be found in the description of this video. And please rate this episode on a scale from 1 to 130, where 1 means it's weak, bland, I don't want to see any more, and 130 means it's fantastic and I want more of this. And if you want more and you're here for the first time, be sure to subscribe and I'll see you in 7 days. Hi.